Most people don't lose money in markets. They lose direction. They hear terms, large cap, mid cap, small cap, but no one explains it simply. So they guess. They follow others. They chase returns, and slowly they destroy their own wealth. Not because market is dangerous, but because confusion is dangerous. One fund looks safe. One looks exciting. One looks risky. But reality is different. Each one behaves in a specific way. Each one has a purpose. If you ignore that, you create imbalance. If you understand that, you create control. Today, we remove confusion. We build clarity. No shortcuts, no hype, just structure. By the end, you will not ask which is best. You will know how to use all three. That is where real wealth begins. This video is for educational purposes only. I am not a SEBI-registered investment advisor. This is knowledge, not personal financial advice. Markets carry risk. Returns are not guaranteed. Do your own research. Consult a certified professional if needed. Your money, your responsibility. Understand what market cap actually means. Market cap is company size. Large cap means top companies, established, stable, trusted. Example, Reliance, Infosys, HDFC Bank. These companies are already leaders. They don't grow very fast, but they don't collapse easily. Mid-cap means growing companies. They're not small, but not industry leaders yet. They are in expansion phase, trying to become tomorrow's large caps. Small cap means early-stage companies, new opportunities, unpredictable growth. Some will become giants, many will disappear. This is the foundation. Without this, everything feels random. Understand how returns actually work. Returns are not linear. They don't move in straight lines. Large caps grow slowly but consistently. Example, 10,000 rupees SIP in large cap. After 10 to 12 years, you may see steady compounding. Not exciting, but reliable. Mid-caps, this is where growth improves. Same 10,000 rupees SIP, higher return potential, but more ups and downs. You will feel volatility, but long-term reward can be higher. Small caps, this is extreme zone. Same 10,000 rupees SIP, some years huge gains, some years deep losses. Emotionally difficult, but powerful if handled right. Risk and return are always connected, no exception. Understand volatility clearly. Volatility means price movement. Large caps, small movements, less stress. Mid caps, medium swings, requires patience. Small caps, big swings, high emotional pressure. Example, market crash happens. Large cap falls 20%. Mid cap falls 30%. Small cap falls 50%. Now question is, will you stay invested or panic and exit? Your behavior decides your result, not the fund alone. SIP strategy in detail. SIP means investing regularly, same amount, fixed interval. Example, 5,000 rupees every month. You don't wait for the market, you don't predict, you just invest. When market is high, you buy fewer units. When market falls, you buy more units. This reduces average cost. For large cap, SIP builds steady base. For mid cap, SIP smooths volatility. For small cap, SIP protects you from wrong timing. Never depend only on lump sum, especially in small caps. Consistency beats timing, always.
Asset allocation strategy. This is the most important step. Don't invest randomly. Allocate consciously. Example, monthly investment rupees 15,000, rupees 7,000 large cap, rupees 5,000 mid cap, rupees 3,000 small cap. This creates balance, stability plus growth plus acceleration. If you are beginner, keep more in large cap. If you are aggressive, increase mid and small cap exposure. If you are near financial goal, Reduce small cap. Allocation changes with life stage, not fixed forever. Market cycles understanding. Markets don't go up forever. They move in cycles. Bull phase, everything rises. Mid and small caps rise faster. Bear phase, everything falls. Small caps fall hardest. Sideways phase, markets move slowly. No excitement. Smart investors understand this. They don't react emotionally. They continue SIP. They stay disciplined. Cycle is temporary. Strategy is permanent. Rebalancing method. Over time, your allocation changes. Example, small cap grows fast, becomes 40% of portfolio. Now, risk increases. Rebalancing means correcting this. Sell some small cap, move to large cap. Bring back original ratio. Do this once a year or when imbalance is high. This locks profit and controls risk. Without rebalancing, portfolio becomes unstable. Step 8. Tax Awareness Basics. Taxes impact returns. Short term. If you sell before 1 year, 15% tax. Long term. After 1 year. Up to rupees 1 lakh profit, no tax. Above rupees 1 lakh, 10% tax. So, what is strategy? Hold longer. Avoid unnecessary buying and selling. Let compounding work. Tax efficiency matters. Common mistakes investors make. Chasing highest return funds without understanding risk. Stopping SIP during market crash. This destroys compounding. Putting all money in small caps because of greed. Ignoring large caps because they feel slow. Too many funds, too much confusion. Checking portfolio daily leads to emotional decisions. Mistakes are normal. Repeating them is costly. Scaling strategy. Income increases over time. Your investment should also increase. Example, start with rupees 5,000. After 1 year, make it rupees 8,000. After 2 years, make it rupees 12,000. This is step-up SIP. Even small increase creates massive difference. Over 15 to 20 years, this becomes powerful. Growth is not only market, growth is also your contribution. Long-term mindset. Wealth creation takes time. Not months, not quick gains. Years, decades. Large caps give foundation. Mid caps give expansion. Small caps give acceleration. Together, they create wealth engine. Ignore short-term noise. Ignore news panic. Focus on process. Follow system. Discipline is everything. Emotion is distraction. Final clarity. There is no best category, only right combination. Large cap is not boring. It is stability. Mid cap is not risky. It is growth. Small cap is not dangerous. It is opportunity. When you understand roles, fear disappears. Clarity increases. You don't need perfect prediction. You need structured thinking. You don't need luck. You need discipline. Large cap, mid cap, small cap. Now they are not confusing words. They are tools. Tools to build your future. Start small, stay consistent, increase slowly. One day, without noise, without stress, you will look at your portfolio and realize you built it step by step, and your future self will thank you quietly.